Hey everybody, welcome back to Trading Technical Indicators. My name is Mike Fairborn. I'm filling in for James Boyd today. Got some big shoes to fill in. Of course, he would want me to give it my best shot. I'd expect James to be back next week, but he is feeling a bit under the weather. It is kind of hitting our neck of the woods, and so I hope he's doing okay. But good to be with you all today. Folks, today I want to talk about the concept of really seeking a trend continuation. What are some of the signs that we might get? And I know JB hits this frequently enough. But what are some of the signs of a trend continuation? Specifically though today, tying into the class, what about with indicators? Are they giving us, can they give us a sense of, or more of a sense of the future direction of that trend is the idea. And so one key approach that a lot of traders, investors will use is the concept of divergence. Now, I've talked a lot about divergence as of like last week and things like those, like along those lines, but that's something I actually look at personally myself, and that is indicator showing strength, maybe a couple indicators showing some strength, but maybe, the trend maybe not ready to break out yet or starting to move. That's a divergence. Indicator breaking out higher, maybe prices not breaking out yet. That's referred to as a positive divergence. I wanted to look at those today because the markets have been showing some strength in general today across a few different areas. I want to look at, the concept of positive divergences and really kind of help you develop that concept so you can use indicators in a different approach as opposed to just, a crossover with price. Really kind of trying to tap in and saying, is the indicator showing us signs of strength or not? So I will look forward to doing that. Good to be with you all today. Different group of folks, but actually I recognize a lot of the names here. So good to have you on board, and we're saying hello to a few of you as we've gotten going in here. Folks, any questions, comments, further into the chat? I'm joined in the chat by a good friend of mine, Barb Armstrong, who is here. Folks, you can follow Barb and I on X. And I think she did. She posted our handles right there. So Barb Armstrong, CS, Mike Fairborn, CS, of course, James Boyd, CS. Even if he is sick today, there is James Boyd, CS. Follow him on Twitter. Yeah. So yeah, I'd expect him to be back though next week. Gary and all, Vlad. Yeah, I believe he's fine. It's just a common cold type thing. All right. Well, with that, let's dive into some disclosures to get the show going. The information here is for general information purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Okay, Schwab does not recommend the use of technical analysis as the sole means of investment research. The paper money software application is for education purposes only. Successful virtual trading during a one-time period does not guarantee successful investing of actual funds during a later time period, as market conditions constantly change. Past performance is not a guarantee of future results or success, and investing does involve risks, including the loss of principal. Okay, well, that actually is all we've got for our discussion there on, our disclosures. So let's turn to the markets. I want to look at some of the sectors as well today. Just give us an idea of what is going on behind the scenes in terms of what we see. I did post a tweet out earlier this week. Well, yeah, I'm sorry. It was yesterday, I should say. I guess that is earlier this week, technically. But was just noting that we don't have any economic events on Monday or Tuesday. But we do have CPI, which is probably the biggest gauge of inflation out there. So just something to keep in mind with the CPI, and to follow that, the PPI that's coming out. But that could influence the market, but really interesting in terms of the market. I'm going to zoom in just to this very interesting area right here, just in the S&P 500 first, as we look at this and highlight a couple of interesting points. Trendline breakthrough here, as we had actually a decent upward move and a consolidation into, I'll just put it over here. It was kind of a flag pattern, flag-ish. But then prices came up and we were seeing some strength, and then we had the China DeepSeek AI announcement right here. We saw another gap down on an announcement with tariffs, and the market's kind of getting maybe a better sense that the term tariffs is negotiation, is what it is, for better terms outside the U.S., etc. The markets have, they had some pretty big abrupt responses to it, but it's kind of look at tariffs as a negotiation tactic right now. At least that's the way it's playing out, is in the current sense. of what's happening right now. So keep that in mind. But this is interesting too. It's kind of a little interesting pattern that we're seeing here from that deep seek. That was an all-time high right there. That high right there was an all-time high in the markets. But look at this. So you gap down, you go back up for about 5 days. We gap down again. That gap down begins with a pretty large bearish candle. Well, we've got one over here too. And then we gap down and we go for about another 5 days. And so here we are again. Now, we didn't gap down today. We actually gapped up. And you can see we're still up on the day, up about 40 right there on the SPX. But, that is actually, after a dip like this, you could say it's kind of fascinating because you could say that could be called a Harami top, but we're coming off the top a little bit. It could be a Harami bottom. It's really kind of tricky. It's a question mark on the candle, what we're getting. It's one thing I'll say is for sure, it's an inside day. And from an inside day, sometimes you get strength to the upside or the downside. Generally, it's in the direction of the trend, as a quick note. But the fact is we've been coming up, and the one thing I have to say is we have been getting these lower highs, and to join with that, these lower lows. So lower highs, lower lows, but we're staying in a consolidation range. And because this was a new high, we could still say that this is sort of a longer term, possibly kind of a sideways flag, if you will. I would say it's definitely a sideways consolidation. We're waiting to see if we can break up higher here or not. What I want to use, though, to tie in, let me do one thing real quick before I dive into the SPX, because I want to start off with it, because it actually is giving us a divergence that I want to recognize and break down a little bit in more detail. Here is the sector grid, a 6-month sector grid of all of our sectors out there. And I wanted to highlight a couple of different areas that we've seen. In fact, I sent out, the last couple of weeks, if you go back on a 2-week time frame, we've seen a couple of areas do better. If it's 2 weeks, consumer staples has actually done pretty well. So too has healthcare. I'm bringing this up because we might be able to apply today's techniques after we go through them to certain sectors out there that might be just showing additional strength. Communication services has been good. It's pulled back a little bit as of late, though, but the trend is still clearly intact. Higher highs and higher lows. We get with technology, though, lower lows and lower highs. Before I go forward, though, a couple of quick notes. We did see a pretty sharp reversal here in terms of materials, kind of a flag pattern. We got a similar flag pattern in staples that actually began to break out today. We're seeing a fair number of divergences occur within the staples group. I'm going to highlight this for you today a little bit. But over here within healthcare, look at this. This has been down for really quite some time. In fact, if I go back further, it was even down, like to the beginning of the year. And this is a bit of a change that we're finally seeing on healthcare. A move up, a sideways move. In fact, let's just do this. Let's just go full screen on this. I'm going to right click in here. We'll maximize that grid. And you can see that we're getting what could be. Well, first of all, that was a break above highs right there. So for the first time in a while, we did get some higher highs and higher lows. And if you look at this, it does look a lot like the possibility of a flag pattern over here. Kind of a sideways move, as you can see, after a run up. One of the key points is you did hit a high, you broke a high there. Now, some people would say this is kind of a cup and handle. It's sort of cup and handle-ish, but, it's not much of a bottom on that candle. It was, and that's okay too. But you can see this over here. See the cup formation and the handle? Sometimes these companies can look really interesting. What I wanted to point out is that this particular group actually has a fair number of positive divergences in it. In other words, the indicators are showing more strength right now than the trend is revealing. In fact, they've actually broken higher, but yet we're still kind of maybe, and what do we want to call it? The flag portion? Or if it's cup and handle, the handle portion? And these divergences can be interesting in terms of what we could see in terms of the possibility of a continuation, like I said, a continuation of the trend higher, or even a trend line, even a trend change as well, like a trend reversal. Trend continuations, trend reversals. That's why traders will use them, and investors as well. So with that, I'm going to go back now to the S&P 500 index here. We'll just go back to it. Here it is. And, ooh, that's long term. There's our daily. Okay, so a quick note, and I'd highlighted this in the market and sectors class from last week, is that we did get this high in the market as we're coming back and looking at the SPX again. So SPX, S&P 500 index. We got this break higher, but you'll notice down here, if we're looking at the RSI had what we refer to as a negative divergence. Highs in the index basket of stocks for the 500, that was a high. We broke into highs. It wasn't by a ton, but we still broke in. But if we look down here, just choosing one indicator, RSI right there, look at that, clearly lower. This is interesting. This happens frequently. And you'll get a pause instead of a breakout. In other words, we didn't see the strength. In other words, the RSI, folks, did not go higher than the prior RSI, okay? Because all we're doing is we're matching up here time frames. That's it. We're not doing anything else. We're trying to make this as basic, as simple as possible. That's all you need to look for on a positive divergence. What I love about it, it lets us utilize the strength of that indicator, whatever that indicator tells us, which is, by the way, a very, very important point to know. What is the indicator telling us? You want to know what that's all about. You want to know what okay, behind the scenes. Hey, what's the math? What's going on? Why do I like this indicator? Is it different from other indicators? That's part one. But then after that, it's a really straightforward process. Once you know what it's doing, how is that indicator reacting relative to the price action? If it's showing strength, that's a real positive. But in this case, I've got to use red. I've got that down here. That's a negative. According to, it's based on the RSI, that's referred to as a negative divergence. So negative divergence is what that would be. Prices are not making the high. This case, they were. That's the market. And if that's the case, that can affect a fair number of stocks, and you could be keeping an eye on that. Let's talk about this too, because I did want to talk about a couple of different indicators today, and I can mix this up as well. But I hope to go into more detail on this for those of you that did catch my topics last week, because I do recognize many of your names. I just want to make sure I'm getting new material for you guys as well, because there's a lot to know about the certain indicators, the different types, and I basically use like three different types of indicators. I use like the MACD, I like the RSI, and I like the money flow. Now there are others that I have used before. I think they're very interesting. I think the TTM squeeze is a relatively new one for me. I use that as well. But understanding the indicator is so important. Let's talk about the RSI real quick, because that's one of them I wanted to mention to you. So you know why a positive or a negative divergence would be important. The RSI just simply measures the percent change over a 14 period. That's the default. The Welles-Wilder 1978 default that he used when he built this indicator in 78 and introduced it goes back 14 bars, and it's just looking at the percentage of closing prices over the last 14 bars, percentage of closes. And if you think about it, I thought this was so unique when I first looked into this. I thought that makes so much sense. The closing price. How do you get a move like this, folks, to go from low to high if it's not closing higher? How do you do that? How do you do it? You don't. It's got to make higher closes. So let's just look at one measurement. And isn't it that maybe the most important metric is the close? It's the final read on the day. People that checking the market at the end of the day, what are they seeing on their stocks? They're seeing the close. But it could be so important. It's the overnight number too, in a way. I mean, for the regular market, of course. But it's really, really interesting, because if you're looking at closing prices, the percentages, the RSI just simply measures as it's going higher, 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 higher. What's the strength of that close in percent relative to the prior 14 days? That's all it's doing. So in other words, let me just explain this in the context of what we're seeing here. This run up right here was weak. it was weaker relative to the strength of the move down. And you might not look at that and say, my gosh, it hit an all-time high. It did. But in terms of the closes, that metric in percentage of closes, it didn't do it. So that's really, really important. And the same thing. So in other words, if we're not getting a stock that's not making a new high, that's a real warning sign because the closing levels are just getting weaker and weaker and weaker. Now, on the flip side, if we were to see some strength, in fact, I'll go into a different stock here to show you that. But if we were to see strength coming in other words, the RSI is breaking higher, well, that could clearly indicate that there's more potential buyers coming in. There's more strength and basically they're adjusting the prices higher based upon the amount of purchases that are occurring or just the aggression of buyers relative to sellers. And so that's why we look at divergences, positive or negative, based upon the indicator that you're seeing. Is it outperforming price or is it not? Here's a great example over here too. If I go back to Apple, now I'm going to go to a 2-year chart, and I'm going to highlight a couple of different indicators. In fact, I'm going to use the MACD again in this case. I'm going to explain this a little bit better in more detail for you guys so you have it down. I'm going to go ahead and just put our main line value line. I use the MACD, the 2 line is what it is. And so I'm just looking at the divergence between a couple of different lines. I don't need the 0 line at all. Don't show it. Okay. Or, I'm sorry. Let's see. I need the average. No, I didn't need the 0 line. I'm sorry. I'm losing it. There we go. Well, I do need the 0 line. And in fact, I want that line to be dashed. And I'll take the average out completely because I'm just looking at the divergence between 2 different moving averages. And that would be the 12 and the 26. And just a quick note on that, because I brought up a new indicator here, but when the 12 moving average is outpacing the 26, so you've got the 12 that's going to hug prices fairly close, but then you've got the 26 that's going to be a little bit further away because it's just taking more time. So it's reacting a lot slower to the more recent price action. And when that occurs and you get this expansion over here, that's what pushes this line up higher. Okay, that's what pushes the main line up, or it's referred to as the value line of the MACD. And so it's just a signal amplifier of a shorter term moving average moving faster than a longer term moving average, up or down, that is. Okay, had to explain it because we want to make sure we know what we're talking about here. Now let's go to a 2-year chart on Apple. And I want to show you what's referred to as a longer term positive divergence. And a lot of times, traders will look for these for indications of the possibility of a bounce and run. Now, I've got a whole set of those that look just like this, or I should say, very, very similar to this today. Nothing's exactly the same, but they look very similar. Now, if we take a look at this over here, and I want you guys to see this on a longer term scale, but look over here with me. Look at price action coming down. Lower lows, lower highs, very clear, very distinctly over here on the chart. There's another slightly lower low, lower high, lower low again. Now, partway through this decline, we began to see some really interesting positive divergence occur. You can see it right there. I've actually got the trend line on the RSI here. Look what's happening. And this is multiple numbers. This is like multiple positive divergences. It's the easiest way to kind of view this. We got lower lows and lower highs throughout this portion right here, clearly, on prices. But if you look down here with me on the RSI, so think again about what's going on with the RSI. We're thinking about the buying power, perhaps the buying pressure in terms of closing prices, percentage-wise, going up and up and up and up relative to the sell-offs. In other words, we're seeing more strength when prices are going up, and we're seeing more weakness when prices are going down. But prices themselves are still going down, 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 down. They're still making lower lows. But using RSI as a guide, look what happens over here. We begin to get higher highs, and higher lows across the board on the RSI. Now, that's an indication of strength, especially throughout the process here. Now, what was going on behind the scenes? I can't say for sure. I can't say that we gapped up on earnings here and they had some great guidance going higher and you got a really special run up here. That was a great run, a huge move. Okay. Could it have been that institutional money, also known in many cases, some people refer to it as smart money, were they buying in more and more and more? And were they being aggressive? And that would show up on the RSI. That's going to influence closing prices. I mean, if you got a lot of buyers, very likely it'll influence closing prices higher if you're getting more institutional buying, as opposed to just retail here and there, and not big amounts relative to institutional buying. Could the RSI have been picking up on that? Perhaps. Let's look at the MACD down below. Look down here with me. I'm going to use the Thinkorswim trend line to help us with this as well. So you guys can kind of see this. In fact, let's bump it up. We're just going to focus on this one for now. We know what prices did. Sorry, it's going to jack it up over here on the chart. But over this time frame, prices were making lower lows and lower highs. Well, at that same low, if I draw off that bottom here, wow, even stronger in a sense than the RSI. So it broke out substantially high. It was making higher highs and higher lows despite that downward trend in price, folks. That could be an interesting indication for traders and investors right there, right? They might not buy right there. In fact, I know, in this class specifically, because I do chat, I help JB in the chat. I know in many cases he's looking for, gosh, you know what? Get the confirmation of the trend. What's his big thing he likes to say? 10-period moving average, right? Price is above the 10-period, which makes a lot of sense, right? I mean, in terms of a short-term move, getting above there could be very interesting. If you look at Apple, we finally got above a range here of solid resistance, and then when it came time to test that, it was right there at support, and we held that level, right? So change in trend. Well, it did make a new high and a higher low right there. It would have been above some short-term indicators. So even if you're getting this, that's just not necessarily a buy sign. I think for those of you guys in this class, and many of you, you like the techniques James has got, I mean, let's get some indications too that it's actually ready to turn the corner. In other words, does it break a long-term trend line? Does it break above moving averages? What else do we have? He uses the home moving averages too. What about a breakout? All these other indications, but it's like, hey, we can keep eyes on this because there could be a change coming up soon. All right, I'm going to take a quick look at the chat and see if there's anything else I can address for you guys. And then, because I've got some for you today, and I've got like 4 or 5 that are showing signs like this, but on a, but currently. So that's what I wanted to show you all today. All right, so I'll take a quick look at the questions. Faye says, Michael, can we create a scan showing positive divergence? Yes, we can. So I'm going to touch on that. I'll talk about the details of that and how to get into it. Now, the scan itself, yeah, I think that was in that the same class I taught there, but I'll double check, and if not, I can do it. Certainly the columns, though. Yeah. So definitely. Okay, a couple of just questions for Barb. And let's see, was there anyone up top? Let's see. Oh, Barb's got it. Oh, pass your request along. Okay, so that was a request. Got it. Thank you. And I think we might be caught up. Just remember, Lehman, Bear Stearns, AJ, I thought they were smart. Yes, they did. Yes, they did. Now, the difference here, Ron, now I'm with you too. I'm not going to deny that, Ron, for sure. Yeah, because I remember I was thinking about the Bear Stearns, Ace Greenberg. Famous guy, CEO of Bear Stearns too. But that business went bye-bye, back in that mortgage crisis debacle for sure. The one thing when I say smart money, though, is you might be getting a collection of it. And it just gives you a chance to look at it too. Look at the buyers and what's going on. That was definitely an unusual situation for sure. But hey, why are they buying? Look into it. Do you feel comfortable? Are they seeing something around earnings or not? That's another place where they smart money could start to unfold. And by the way, to move these types of indicators, I mean, collectively on something like an Apple, you have to get not just a few groups of institutional buyers. There might be many that are buying. This kind of reminds me of what I've heard, is maybe an accumulation of shares right down through here. And that would be the smart money aspect of it. But yeah, yep, you always need to dig in yourself and confirm. But these indicators can be interesting. And today, we are actually using a form of double divergence. And I could just stick with the RSI, but I wanted to stick with a couple of indicators actually that made sense to me. These make sense to me. I understand them. And I would suggest doing the same thing, just looking at divergence on those. Okay, let's hit our companies one by one as we go through here. I'm going to let you guys see if you can spot the divergence occurring, the positive divergence over a period of time. Let's highlight this. I'll try to make it as easy as possible. See this low right there? That, by the way, was also a low here on the RSI. It was also a low on the MACD. But prices began to make lower lows. Okay, we did get one high that popped up here, but we were getting some of these lower lows and lower highs too. It's kind of an interesting sort of a behavior. Now, it is coming ahead of earnings. And I'm just saying, hey, if earnings are positive and you find out after the fact, so we might be looking at smart money now, but then maybe earnings comes in as a positive, question mark, we don't know. But if it does, and maybe gaps above a level, could we keep eyes on it? We could. We're a little ahead of the game, perhaps, due to indicator divergence. But let's just follow this again down below. So that was our low. We made, low, 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 low. We held a lot of highs over here. I know we dipped slightly over here, but we're almost back to making a higher high on the MACD. We're not even close to a higher high over here. RSI, by the way, did make a higher high. This was making higher lows. So there could have been an accumulation phase in here somewhere. Question mark. We don't know. There could have been. They could still be holding. And why would we know? Why would we think that? We're starting to get some really interesting signs of a positive move of these indicators breaking above or getting close to breaking above their higher highs while prices are not. So we're looking at divergences off the top, off the bottom. That's one right there I wanted to throw out to you. Okay, let's go ahead and do KHC. Kraft Heinz, one of we looked at it previously, the consumer staples. This is definitely a consumer staples group, had been doing well. We don't think we quite need a 2-year. I do want to use a 2-year, actually. I do want to use a 2-year. Notice earnings right here. Earnings. Okay. That was a low in the chart. That was a low on the chart. That was a low. Lower high, lower high. What about the RSI? There's your low. Higher low, higher high. Higher low, higher high, higher low. Accumulation, that's the question mark. Down here, same thing on MACD. Higher, higher, higher. We'll just look at the lows. Both having accumulation. Do you see what happened, what followed afterwards? Now, that was a nice run. Now, I realize that we ended up going into kind of a basing pattern and ultimately breaking out of that basing pattern. But after that earnings right there, that was kind of like that move that we just saw on Apple. It was just a strong move that followed afterward. Let's go to some other ones right now. Remember I showed you guys that healthcare had been doing strong. One of those areas that's been having quite a few companies that are really diverging a lot as of late. The 6-month will really help us see this a bit more. Oh, there we go. Possible accumulation here. Down, down, down on price. Lower lows, lower highs. You guys can see that. It's so clear. Trend is down, but not over here. I'm going to use a trend line to show you. Draw it off the bottom where that low was. See it going higher? That line is extending up. Okay, there's a slope to that line, an upward slope clearly. If there wasn't, it would look something like that. Same down here on the MACD right there. You see it? Higher highs, higher lows. What's going on? We're ahead of earnings again. I know it's earnings season. There are 78 companies this week in the S&P 500, which many of these stocks are that were, in fact, yeah, all these stocks that we're looking at right now are in the S&P, I believe. There might be one that's not. There's 78 in the S&P 500 reporting this week. Interesting. We're right there. What could happen? Could this change? Could this trend change? Do you guys remember what I showed you over here? This is always so interesting too. Let me just detach this. The reason is I want to unlink it and just show you what I'd pointed out over here. Over here, back to our good old sector grid, what did healthcare show us lately? What's healthcare been doing? Now, I know biotech might be lagging, but healthcare collectively had also been going down, 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 down. But over the last month, we broke that downward trend and began to go higher. And that was the original cup and handle or flag pattern, whatever, maybe, pattern that we were looking at here. In other words, the sector itself could be showing some bullish strength. And a lot of times, to get a whole sector to flip up, a lot of times a bunch of those industries in there, including biotech, could be right there. So you might have, if we're talking about a top-down approach, the market showing some strength, it's been a sideways range, but then sector, and then finally the industry and company. So there might be some top-down strength that we could be getting from this as well. I just wanted to show you that because it's not just, let's see, it's not just Biogen that is in that group. It's a whole other group of companies that might start to also turn up when healthcare itself goes up. I've got another one here for you. Regerion, REGN. Yeah, this one's even actually a little bit bigger. I mean, this is just way crazy on the MACD. Again, so you guys can recognize it. Lows through here, pretty clear. But then if you look over here with me, what do we have? Off the bottoms. Take a look at it right there. Extending on up. Take a look at that right there. And right there. Huge moves. So totally counter to prices. Yeah, I can throw some moving averages in there. Absolutely. In fact, let's do it right now. Because one of the things we mentioned, I know JB goes into this quite frequently, is that with the moving averages, that gives us more potential shorter term confirmation, right? Of a turnaround. Let's just do that right now. And I know some of the ones that he like, in fact, I've got it up right now. Exponential 10 period, I think he uses that. Let's go ahead and just, thicken it up a little bit so we can take a look at it and show the study right there. And here we go. Okay, so did we, we just started to move above the 10 period. You could see that we had held up below it for a very long, long, long period of time. We've been holding below it. And we're above it now. Could there be some support there or not? That's a question mark. Now, another one that I think you might look is maybe the 20 period moving average. I'm going to do that one on a simple, make it a little bit different here, but a simple moving average, I'll go 20. In fact, what I generally will do, I'll try to just set it up to generally a month's time frame. So there's a 21 period moving average. Let's change the colors though. Oh, that defaulted as a 9? That other one? Flip that one to a 10. 1 second. So let's change some colors here. We'll go to green here. And it was, oh, I flipped the wrong one. Dang it. All right. We'll put that back to our 10. We'll keep it green. This one here is going to be a 21, and we'll keep it at that color and go from there. Okay, there we go. So possibility of a crossover, perhaps. Not yet, right? We don't have a crossover of a moving average, so that could be tied in. So all I'm saying with a lot of these is we're looking and using a divergence for the possibility of a flip up in price. Now, did we need that on CSGP? Not exactly. CSGP was actually already starting to trend up. I mean, it already had a pretty early break. In fact, you were getting a higher high right through here. That's a higher high, right? A higher high over here, and maybe a higher low. And then there is your kind of setup right there. And yeah, it's been holding up nicely across that level. This is one that did have some divergences off the bottom too. But it doesn't, not every one of these stocks has to be like one of these that are just going down lower lows and lower highs. I'm just saying these divergences can be an interesting indication for the point that I brought up initially, and that is for the possible continuation, in this case, of the trend or change of trend. We could really get a couple of different scenarios there. Let's look at two more. Airbnb. I'm going to back it out to a 1 year. Let's see if we can see this a little bit easier here. Okay, so an interesting thing with Airbnb. Remember, you can look at divergences off the top or the bottom. It takes a little bit more time to get used to, but are we making a new high in Airbnb? No, not in prices. How about on the MACD? Yes, we did hit a new high. RSI, we did hit a new high. There's still some consolidation in here, like we were getting. Okay, but more recently, that RSI is ticking up. I don't know how you feel about Airbnb. I'm just saying it's got a long-term divergence. Maybe something to keep an eye on. It does have earnings, so it's one of those additional companies. It's got earnings this week. There are quite a few, but RSI started to show some strength. And let's be honest, look at prices, higher highs and higher lows. All right, well, I've got one more here. But you guys, if you guys are finding this information useful, this class is specifically about trading with technical indicators, and so wanted to get a divergence in here using really kind of double divergence as we go through this. But if you would smash that like button, it helps us promote our channel. Definitely subscribe to our channel. Love to have you on board there as well if you like this kind of content coming up more frequently. All right, let's hit it. Let's finish it off with AMAT, Applied Materials. Oh, I've got to take those drawings off unless they're going to line up. Yeah, a little bit. There we go. Okay, so this is one that kind of has the combination of the two. So we've kind of stepped outside of healthcare. Now we're back into some of the technology areas. But over here, for example, we had been making, a higher high and a higher low off the RSI, and we began to kind of make a move up. That led us on up to where we're at right now. And we do have a change in trend, at least a shorter term change in trend. You've got a higher high here, a high and a higher low. And you got another higher high, another higher low. So this could be an area that you could kind of keep an eye on over here and see what's going on and see what you got. Now, you don't necessarily have to use two of these as divergences. That is how I set up today to kind of go through the process of setting this up in terms of like a scanning through it or finding it. I'm going to show you guys where you can go to right up here. I did create actually a code on this that enables you to scan through really quickly and pull that up. So if you just go to our YouTube channel here, and if you go to playlists, if you want a code like this where you can just quickly find it, it's tough to find. If you go through, there was about, I want to say about 8 companies in the S&P 500 that are showing this right ahead of earnings, but not too many. That was about 8 in total. So here's that ThinkScript class where I have it. It's listed here. I'll put this into the chat for you, this link, but I posted a number of codes, and by the way, they might kind of correlate to this class in terms of just indicators. So this is using ThinkScript to do it. You can go in here. This was the one specifically, where I did create it on double divergence. In fact, I'll put a link to that class in here so you guys can snag that as well if you'd like. If you want to take a look at it, let me see. I think I just copied the link right there. Yeah, in fact, I can do it just right off the top. So this is to the, this is for double divergence, which is what we talked about today. Double divergence, and I'll put that link in right there. And as you guys know, so I post the link, the description section. I talk about it in the class. I go through a few more details on how to set it up in there, if that's something you might find interesting. But yeah, it's there. It's available to you guys if you want to tap into it. I did one just last week on the TTM squeeze, which is another one. I haven't been using it too much, but it's a compression of volatility using it when the Bollinger Bands fit inside the Keltner channels. But that is a different class altogether. Today, did really want to spend some quality time with you guys and get that point across in terms of divergence. Now, this code that I'd set up, you can use it, and I talk about it in the class on how you can use it with different indicators. You can use it over different time frames. I'd actually chosen a longer time frame to do it to use it on today. But that is what I had for you all. Yeah, it was good being with you. Again, smash the like button if you find this kind of content informative. I don't think that there was a survey today, but it was good to be here with you today. Folks, James Boyd will be back in next week. Thank you, Barb, for your help in the chat. And folks, you guys have a fantastic rest of the day and really enjoy. Hopefully this was helpful for you in learning divergences, etc. See you next time.